Welcome back. And in this video, I wanted to give you my analysis of the company ProPhase, symbol PRPH, and give you some reasons why I recently built a position in this company and my rationale behind it. So once again, not a financial advisor. Okay, first we'll start with the fundamentals to get an idea of what ProPhase is all about. Symbol PRPH we'll put into our dashboard. Healthcare drug manufacturer company, IPO'd 38 years ago. We have 20 years of data. Let's take a look at what they do. So the company is looking at enhancing wellness, improving health, diversified medical science, technology company. They pivoted in 2021 and acquired Nebula Genomics and formed ProPhase Precision Medicine. So they're rapidly developing, creating new products. These are all things we like to see. If I'm looking at a company's website, I'll go right to the relations page and just take a look at the management team. I'll likely look a lot of these folks up on Twitter, LinkedIn, get an idea of what their background is, if they've turned around companies in the past. Okay, back to the dashboard. This is a microcap company, 225 million. Nice earnings relative to revenue. Don't pay a dividend, although they did pay special dividends the past 2 quarters. Getting recommended. PEs, not that meaningful. So for this and right now in general, I'm looking to do short-term trades based on the macro environment. This is not the best time to be buying and holding. And when I go into a position, it's going to be with a set of rules. And so for this, I'm going to have a buy position. I'm going to have a sell position as well, an idea of when I want to exit the position. But for this, I did target healthcare companies. We look at the yield curve. It continues to be inverted. So the 1 year is inverted above 2. It's tied with the 3. The 1 year is inverted to the 5, the 7, and the 10, which means recession is imminent. Additionally, from a macro perspective, or what the macro regime is, but this just takes the inflation numbers and the CPI numbers and then puts our economy for the US, and you can use this for any country, into one of 4 quadrants. So right now, and for the last quarter, we were in quad 3 stagflation. It means rising inflation and growth, GDP decreasing, going down. And likely in this quarter, we're going to have negative GDP growth, which will put us into a recession. But looking to next quarter, you want to look ahead. You want to skate to where the puck is going. So in this case, we're likely moving into quad 4, which is a declining rate of change in inflation. So inflation coming down, likely due to demand destruction and increased inventory, and growth continuing to decrease. So that puts us into quad 4. So certain types of investments will be more advantageous or have a higher probability of doing well than others. One of those for equities is going to be healthcare. Going back to the dashboard, looking at decent numbers here. Price to cash, very nice. Price to free cash flow, not great. A nice quick and current ratio. A lot of assets to offset their liabilities, and not a lot of debt. That's all very good. A lot of earnings over the year. I'll still have my stop position, and we'll be able to exit if this forecast comes to fruition. Past 5 years, pretty good. Sales quarter over quarter, this is excellent. 210%. You don't see that a lot, so that's great. And an ROE of 32%. This is very good. We like to see this. If you're following like the Can Slim model, Bill O'Neill, then this is very good. You want to have at least 25% or greater if you're looking for a trend following trade. Insiders owning 16%. This is also very good. And the people running the company own the shares. So they do have an interest in the stock price going up. And we'll take a look real quick at the open insider if there's been trades. PRPH. So we have few buys from the director. This is going back to April. Price has certainly gone higher since then, but you can see why people were buying this. Now, not buying a whole lot. Back here in 2021, CEO purchasing more. Additionally, institutions only 10% owning. That's very good. We'd like to see that number under 50% and lower so that we can catch that wave. So for that, we can look at Whale Wisdom. And we can look at recent purchases. So Cambridge bought, really good firm, and then a bunch of selling. This was all into the spring. And again, you're going to see that deleveraging, especially in these microcap companies. A lot of selling, but we might be on the other side of that. And now companies are starting to buy it again. So that's a good sign. Back to the dashboard. Very nice gross margin, good operating margin. That's all good. Very small short float ratios, all good. Revenues gone up a lot. These are great numbers. The annual revenue, 2021, 445%. And then 2022, estimated about 30%. That's all very good. Quarterly revenues for this last quarter up 1,000%, and that showed in its earnings surprise for this last quarter. Part of the reason why it got such a big bump. Moving down to what our experts and gurus would say, we have a DCF of 1448, earnings yield, nice ROC, makes sense because we had a high ROE, or return on capital. Requires multiple under 10 of 8.5. This is very good. This also means that we could see a buyout in the future. Outperformed the market. A very nice Petrosky F score of 8. Again, you want to see between a 7 to 9. If you can get an 8 or a 9, that's very good, which means very nice ROA. Our cash flows are greater than our net income for the year. You have your leverage, liquidity, and source of funds criteria. And so you're looking year over year and if numbers are getting better or worse. Outstanding shares remain the same and gross margins, asset turnover, very nice. Okay, back. Altman Z-score. This is a 2.6. You could calculate this another way and it comes out to around 3. Peer analysis, you have more positive than negative, so very nice against these other small biotech companies. Vita sales, nice. I don't put a lot into the news, but if it's a company that I'm looking to make a trend buy out of, then I definitely will take a look at it and see if things are happening. But in most cases, all of this and whatever's in the news has already played out in the price. And that's what the charts are for, because these fundamentals are lagging indicators. The chart will be the forward indicator and tell us where the company and the direction is going. So they announced the new licensing deal. That's great. Announced significant lab expansion. Also very good. Okay, over to the technical side. So this setup looked very nice. Coming into January 2022, have a nice Darvis box forming with support down here at 477 and resistance up here at around 8. And I kept an eye on this, where it was going to come out of this box here in April. And normally you would set your buy at the top of the box with a stop loss right below it, maybe 8% or so below it, but you'd want to have a nice rationale for where you want to have that. So it broke out of the box, but not in a lot of volume, kind of broke down and bounced right off the 30-week moving average. This is always very bullish. So when it breaks out of the box and touches the 30-week and bounces back up, this is why you saw that lift off and now you have that volume. So this was all very good. So looked at this and had a buy coming back past this resistance at 808 and then buying right above that. You had an increase in the Mansfield strength indicator and you had the MACD flipping and turning bullish. So these are all very good. In addition, you have a very large cup and handle potentially forming over here and over here. Okay, that's all I have. Thanks. Bye.